The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 29th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in at 877-927-6640. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow up 0.5%. That's 127 points, trade out of 24,815. The S&P is up 0.8%. That's 21 points to the upside. 2679 is her print. NASDAQ 100 not participating, having a pity party, down by 0.2% off 14 points, trade out at 68.38. Russell 2000. Strong dog, not the strongest dog, but the strong dog, up nearly 0.9%. 13 buckaroonies, straight out at 14.96. The strong dogs out here are the semis, the transports, even the New York Stock Exchange getting in on the game. They're up nearly 1% or a little over 1%. You've got the NASDAQ composite basically flat, 6 points. Wilshire's up 0.7%. Spot volatility index trading out at 23.48. That's down about 3% or 68 cents. Gold is off nearly $9. 12.27 is the print. We'll try to go figure out what she is doing. Silver down 23 cents. That's off 1.6% out here. You've got light sweet crude off a quarter, trading out at 67.34, leading the charge the upside dollar-wise. That would be Booking Holdings up 53, Red Hat up 50, Charter Communication up 10, Alta Beauty up 10, Chipotle up 10, Tesla, not 10, but 9 buckaroonies. Hey, if we take a look at what's leading to the downside, it is the amazing one. Amazon down $67. That's 4% to the downside. Google up 17 bucks or 1.5%. Boeing's off 11 bucks or 3%. Lockheed Martin down 11. Tilray off about 11 bucks as well. Of course, I want to look at what you want to look at and what you want to look at. First, we go to the emails that came in, and just one email that came in. Michael P. Michael P. says, "Hi, Steve." Hey, Michael. The NASDAQ futures is messing up the party. Hey, Michael is right. The old pity party out there. Is there support close by for the NASDAQ futures? So let's go take a look at it out here, the NASDAQ. The NASDAQ futures, let's do a 120-minute time frame out here, Michael, for you and I to take a look at. You might say, why? What the heck's with my keyboard out here? That didn't work. This could be a slight problem if I can't get the keyboard to work. There we go. Why take a look at the 120-minute time frame? That's an excellent question, by the way. It's because what we know, what you and I know, and now everybody knows, the entire world knows, is that the NASDAQ on 120-minute to 2-hour time frame created one of those Rhodes Momentum Indicator bottom patterns out here recently. So we want to go ahead and utilize that time frame to try to understand, hey, what is it doing or what is it not doing out here? Now, price needs to get above the top of or the bottom of its daily profile. That's at 68.30. Just underneath that is Stevie's red line. So that 68.30 level, that's going to be important. What it has done thus far, off of that bottom, it's made a retracement. By the way, that was wave number 7 on the way down when it made that bottom. So we pay attention to those. And now what we're seeing here is the retracement. You asked the question, is there any support? Well, the only support that Stevie can find out here for you, basically on any time frame, would be take a look at good old Leonardo da Fibonacci out here. If we take a look at that, the retracement coming from the low out here, the low, by the way, was at about 4 o'clock in the morning, October 26th, to the high. And the high out here was at 6 o'clock. This morning, October the 29th, what we'll see is it did a 0.786 retracement. 67.89 was the actual 0.786 retracement and a bit of change, and what it got down to was 67.86. So if there's support, Michael, we've hit it. Have we hit it? Well, I don't know. All we have to do is take a look at that 2-hour time frame that we looked at and said, hey, the prices are, if this is the bottom, if this is a bottom, then what price needs to do on the 2-hour time frame is at least get above 68.80 is the number. That's the bottom of its task market profile. But it is having a pity party out there. Now, if the markets have bottom, the NASDAQ, and Michael's exactly right, it's going to have to participate. And the way it's going to have to participate is it's going to have to get above Stevie's red line for its daily time frame out here. And Michael, what it did earlier in the day is it got up towards it, didn't get to it, but got up towards it. By the way, that level is 70.14, 70.15 as we speak right now. If there's a bottom, actually, Michael, you're looking for a bottom of the NASDAQ because you want to see this thing participate. It actually would do you better for the NASDAQ to close slightly in the red today, meaning below the contract open yesterday. And the reason is because then tomorrow, tonight, overnight, the end of the day tomorrow, you could get a bullish reversal candle signal. That would be nice. That would be important, especially since you've got your Rhodes momentum indicator potential bottom signal that is present. No way to get a bullish reversal candle today. And today, the only way you'd get some type of indication of a bottom is a close above Stevie's red line. You don't think that Stevie's red line is important? Now, you can own it too. You can become a proud owner of Stevie's red line. You just need to know how it works. And I can tell you how that works. Of course, the easiest way to find out is sign up for the daily newsletter, and then you've got a workshop that shows you exactly what is involved with Stevie's red line. But back to that red line out here, not that we ever left it, but the real key is going to be, hey, what's the Russell 2000 doing? Seems like it has a mind of its own out here. What it was doing today is it was testing Stevie's red line. You can see here 1513 is the number. It got up just slightly above that. But the signal, because I know somebody out there is asking, hey, has this market bottomed out here? Cannot, will not bottom until we start seeing prices close over that level being Stevie's red line. It is probably the Russell 2000. It's either Russell or the NASDAQ, Michael, that's going to provide you and I with the best signal out here. So watch for the 15, we'll call it 1514, even Steven out there. If you were to see a close above that in the equity futures contract for the Russell 2000, then, and only then, may we have a bottom. But as you know, we're going to have to get its cousin, NASDAQ, out here to go ahead and participate. The two of them have got to be the leaders to the upside. And right now, as you pointed out, the NASDAQ, the NQ, it's having a pity party. And the only way for that to change, if you know somebody that's having a pity party, it's pretty easy. They need a compelling future. When it comes to stock trading, the compelling future is close above Stevie's red line. It's as simple as that. Dow's up 136, S&P 21. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Hey, I like the kind of pity party that Turpin 2 he will only go to one type of pity party, and that's the kind that is held at a winery. Yeah, and I like that. And the reason he'll go is because he can say, "Poor me." Yeah, that's the kind of pity party. That's the only kind of pity party to go to. Hey, let's go to our next question. That is on Mr. Hi-Ho Silver. And if we take a look at that, the question is there a bottom here in silver? If we take a look at the daily time frame out here, well, actually a few time frames. Let's take a look at 4 different time frames. Here's a silver contract, and we can take a look at the 1 hour, the 4 hour, the daily, and the weekly out here. And what we don't like about the daily time frame, now intraday, do I see some type of signal? Not just yet, certainly not on the 60. If I just turn this to a 30 just out of curiosity, is there anything there? No, I don't see a candle formation, nor do I see a set of profiles. If we really go down to a 15-minute, do I see anything out here? The answer is no. So no reason for me to keep going any further. Let me just reset that back to 60. Here's what we don't like about what we see here in Hi-Ho Silver, and that is if we were to close at this price, or I should say if we were to close below $15, $14.56, then what we would have is a close below a daily bullish structured profile out there. And then my answer would be no. I don't see a bottom here. We haven't seen a close below the bottom profile, the bottom level of the profile, the support level of the profile since the actual most recent bottom, which formed on September 11th out here. We can see where prices pulled back and has tested a bottom of a profile, October 8th, 9th, 10th. And the 12th out, I'm sorry, and the 11th out there. And price was even testing the current profile on the 18th, the 19th, the 22nd, the 23rd out here. And maybe today there's going to be some burst of energy to the upside, and it'll buck that Bronco and get back about $14.56. But if it doesn't, then what we have to assume out here, we don't have to assume anything, but what I would assume, just based on the other profiles, is that what we would see would be a move down to about 14.14. Now, we can see that this is the second week that we have a orange-colored box. It's the beginning of the week, so it's too early for me to call for a change in, well, not a change in trend, but a new profile to form on the weekly basis. So there's not much to really go on as we speak right now when I take a look at silver. If I look at silver and look for Stevie's red line, well, that's priced above where we're trading. That's at around the 14.55, 56 level. So another 10 cents higher than where we're at. We haven't seen a close below that since the bottom formed as well. Now, the most recent bottom out here. So a close below it, a close below the bottom of the daily profile, those would be negative messages for silver, and I would say I'd look at the 14.14 level, other than using some type of retracement out there. So that's what Stevie sees as we take a look at high-ho silver at this moment. Let's go to our next question. This one coming in from JJ. JJ writes in, hey, Steve, hey, JJ. Do you see Amazon bottoming anytime soon? Well, let's go take a look at what it is doing out here, the amazing one, AMZN. And the way we're going to do that, JJ, is take a look at the 3 different time frames and see if we can find any types of profiles. While that's going on, I'm going to go ahead and take a look, or try to take a look at it. Oh man, I got the typo issues going on here. AMZN. There we go on my other system. But here's what we know about the daily time frame. We don't see support. Support here just being the bottom of a daily profile. We don't see a weekly support out here because price is trading below that too. And if we take a look at the monthly, that's way down. And when I say way down, I'm talking 10.27.25. We're trading at 15.71. So this basically says, okay, forget that. Let's go take a look at Stevie's other chart, see if we can figure out anything out here, JJ. And one of the things we can figure out here with regard to Amazon is right now this thing is moving lower, doing less relative energy. So you can see Stevie's, Rhodes momentum indicator signals out here. Or we're beyond wave number 7, so we can wave goodbye to that being the bottom out here. And what you're going to need to see is some type of bullish reversal candle form, even today or tomorrow out there. And then you're going to need to see a close above Stevie's red line. Price has been underneath Stevie's red line. It used to be green. Now it's red. That means we have a falling price oscillator below 0. It moved down below there on October the 2nd. And the bearish message for Amazon, that occurred on the trading day of October 17th. I know you say, well, wait a minute. That bearish message, price was below the high that you just gave me on October 2nd. Well, the reason that was the bearish message out here, JJ, is because on the trading session of October 10th, 10/10/18 out here, that is when Stevie's green line turned red. What that meant was the price oscillator was at 0. What we usually see take place, it's a phenomena. I cannot tell you why. I just know that it happens a high percentage of the time, a significantly high percentage of the time. Don't corner me on that significantly high percentage. I don't know. It's just not a coin toss, that is for sure. And what unfolded here was a test of price in that red line. That is what occurred on October 17th. When price turned back down, that was the bearish message. Nothing more bearish than a falling price oscillator other than some type of bottom pattern that's forming. And maybe it's trying to form a bottom because it's got that Rhodes momentum indicator signal. But it needs a few other things before it confirms that. So if we do go back and we take a look at that daily time frame on the black background E-signal charts out here, what we're also going to see is that price is moving down into a sign of strength. Just much easier to see on this set of charts out here. That sign of strength inside of Amazon took place at the price level of 1529.42, and we've been down to a low of 1550 out here. Now, why do I say 1529.42? Well, because that was in essence the bottom of the gap. The bottom of the gap being the high of April 26. I know that's counterintuitive with regard to highs and lows out there, but just look at the very high of that session of April 26, and the high there was 1529.42. And the very next day, you had price gap up, do it with accelerating volume. By that, we mean 13 million shares are pulling back right now into that breakout area. You've got 7.5 million shares. Seems like lighter volume. Won't know till the end of the day, but maybe you've got the 1520. It's in an area where price recently, I can't say recently, April 27, 2018, 6 months ago, where price did break out inside of Amazon. So it's possible, JJ, that it's getting ready to form a bottom, and that is Amazon. Thanks, right in. I hope that helps you out. Let's go to our next question. This coming in from John F. John F. writes, hey, Steve, either Etsy or Ecte, good for the long haul, the rest of the year. And let's go see if we can find out. ETSY is the ticker symbol. And I know you asked for one or the other, based on the calls or lack thereof, and the emails and pings inside the Tiger's Den, you might get a twofer. So Etsy, if we take a look at Etsy, ETSY is the ticker symbol. It happens to be the name of the company as well, not to confuse you, but this has pulled back to support. Support in this case out here is the bottom of its TAS market profile. It's 39.62. We've been down as low as 39.45 as we speak. The volume today, 963,000 shares. Last time down here was with 3.6 million shares. Does seem like volume is drying up out there. And yeah, as you pointed out, I know who you are. This year saying, hey, wait a minute, Steve-O, look at how this thing is pulled back into a breakout on light volume. And that breakout being the top of the gap, that's actually the bottom of the session from June 14th. That's at a price level of 39.84. That had volume erroneous. Yeah, 26.7 million shares versus 964,000 shares today. Etsy, it might be forming a bottom. We'll take a look at it further when we get back to this one.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at Etsy for John in Sarasota. And, you know, the thing here, John, is it gets a bit tricky. Now, price is pulled back to support. So if you're asking me, has price pulled back to a support level? This has definitely done that, doing it on lighter volume. You'd like to see this continue to close at the end of the day, meaning today, above 39.62, you're at 39.87. That's the bottom of its profile. If it closes below that, well, what we don't know is will it then trade below October 11th? Now, there's only 3.6 million shares there. Excuse me, I had a piece of dust or something fly into my mouth as I was speaking, and on the inhale, it went down the wrong way. And the wrong way is anywhere down there. You don't want to be taking in dust, if you know what I mean. I think I need a dust around here. All right. And if it goes below the October 11th low out here of 38.64, then price could actually move all the way down to the real level where the breakout began. And that's at a price point out here, John, of 33.49. So you're kind of like in a tricky area. How are we going to know? How are you and I really going to know if Etsy is ready to move higher? I would say the only way you and I are going to know this for sure is if we can get some double ghee confirmation out here. What we mean is that price needs to close above Stevie's red line. Today was a test of that level. That is 41.80. It was a test and a rejection at this stage. So it's trading between a level of resistance and a level of support. I don't know which one is going to be fulfilled out here. If price could close above 41.80, then that gives you that run to only 43.55-ish, or the trading session from the high just a few days ago, which was October 25th, that little bearish engulfing candle. So for some reason inside Etsy, that October 25th area and that October 20th level, that's where your sellers are lined up. And you need to clear that level in order to get back to its highs. And back to its highs would be that little green dash line out here that began that Tom DeMark set up trend line. That's where you have 9 consecutive closes below the close 4 bars prior or earlier. Yeah, that's a mouthful, but that's what it represents. And that high out there would be the price point of 52.26. So there's the work that you need to do, your reward risk out here. The first thing is you can't get into this until it closes above Stevie's red line. The second thing is above the top of the daily profile, 43.53, 43.55. And then the next area or hurdle is the high of October 25th. And if it can do that, get above those levels. By the way, that high is 44.60. Then you're off into the 52 level out there, 52.26 to be precise. Not that I would use that as an exact spot where price would head to, but it's not too shabby out there. So I think you got to just sit tight. Now, with regard to the other one, Ixnay out here, I really can't give you a whole lot of information on it. Not that I don't want to. It's just that there's no volume in this Swedish company out here. Lecta, I guess, is the name of the company, and they provide radiation therapy, surgery-related equipment, and clinical management for the treatment of cancer and brain disorders. So many gaps out here. Must be a currency conversion issue, and there's no volume. So how can I really talk about this? 6,000 shares today out here. So if you're going to trade this, man, just find out the exchange it's trading on and trade it on that exchange versus here in the U.S. There's just almost no way to get out of this if you need to out there. And that's ticker symbol EKTAY. In the Tiger's Den, looks like Ruby is getting in on the game and on the action out here. And Ruby says, Steve, have you commented about the Russell 2000? If not, can you please? I did, but because you asked and you weren't present, we'll go ahead and just take a look at it right now. It's very simple because, Ruby, the Russell 2000, in essence, let us down. The question is it going to lead us up? And the answer is, well, we don't know. What we do know is that price so far today has tested and rejected Stevie's red line. It's at the 15.14 level. As price moves higher, that line will move higher as well. But, you know, use 15.14, 15.15. We have not seen it close above Stevie's red line since October the 3rd, and that's really kind of, you know, that's an iffy. That was September 20th. Forget about October 3rd. September the 20th out there. And really, we haven't seen it close above it since September the 4th. So right now, here's what the Russell 2000 is telling you, Ruby, telling me, Stevie. And that is that what we've seen so far is a counter trend rally. Yeah, that's it. just a counter trend rally right into resistance. If price closes over that level, then you're on to something out there. Where is that something going to take you to? Well, that's a good question. Where that something would likely take you to would be some profile level out there. And what the Russell 2000 is attempting to do, when I mean attempting, I mean it's attempting. It's not confirmed, but what it's attempting to do is form a new daily profile. That's in the right-hand corner out there. And the top of that box is 1566. So Stevie says, if price can close over Stevie's red line, that 1515 level, then you're looking at a move to 1566 at a minimum out there. The question is the Russell 2000 going to be able to do it without the NQ? And I don't know the answer to that. I do know that it would be way easier if it had the backing of that NASDAQ. And the only way it's going to get the backing is for it to also, that's the NQ, close above its red line. Now, that level is 70.14. Now, I know there's some of you out there that say, NQ, where am I going to get the NASDAQ futures? I don't have that on my screen out here. So for you, I've got a special. And that special is what's the NDX 100 Stevie red line area. Since you asked, I will tell you. Of course, all that talk was nothing more than just a way for me to waste a little time so I could actually go find that chart for you. Now that we found it, that level is going to be 7,002 and 37 pennies. Don't worry about the pennies because that number is going to change just a tad out there. But that's what you would be looking for. Now, Ruby. Between you and I, if the NASDAQ finishes kind of like it does, kind of poor as we speak today, that's actually could be bullish out here. I know it's like counter. You kind of you take a gun to your head and say, well, what do you mean? I mean, because if it does finish like today, you could get that bullish reversal signal. And then it closes above Stevie's red line. And then I know about all the whole window dressing thing out there is that you could be a bottom. Yeah, that's what it would be saying. It could be more than just the old dressing in front of that window out there. So that would be the levels. Those would be what I would be looking for. But the question is, hey, is the Russell 2000 telling us something? And in fact, it may be. Now, for those of you that are saying, well, come on, Steve-O, you and Ruby have this little dialogue going here, and you're talking about the Russell 2000 equity futures contract, but that doesn't help me. All right, so I want to help you. Here's the Russell 2000 daily index, and we can see that price also hit Stevie's red line. So for those of you that don't have access to the equity futures contract, that means overnight you're not going to know what the message of the Russell 2000 is. It's going to be 1511.90. That's the number to write down on your pad of paper out there. But it could be 1512, but right around that 1512 level out there. Yeah. Hey, by the way, just out of curiosity, or not curiosity, just a coincidence out here, I suppose, is that when the Russell 2000 made its high out there, it did not do it with wave number 7. Hey, congrats to the Boston Red Sox. But what it did it with was wave number 6. And you know what we did on Friday? Wave number 6. Is it possible that lightning can strike twice in the same spot? Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Good to be with you. Sorry that I wasn't with you past Thursday and Friday. Won't be with you this coming Thursday or Friday as well. And oh, by the way, one of our denners, Mr. Z in the Den. If you want to write this down, if you'd like to follow the equity futures contracts, which you should want to follow, and you can do it in real time. He says go to www. Stands for World Wide Web .investing.com/ You know, that's one that kind of goes from upper right to lower left, so to speak, /charts /real-time-futures-charts out there. Now, that'll get you the real-time equity futures out there. Now, the interesting thing is one of the guys that I was with over the weekend, he's responsible for managing trillions. Yeah, not billions, trillions of dollars in the equity markets, the debt market, and so on and so forth. And so he says, this is just between you and me, they have not seen any institutional money head to the doors yet. None. Zero. Zippo. In this little decline that we've had. He says they see retail type money. Those are the guys with the weak hands out there, flee for those doors. But nothing. And this is big dollares out there that are being managed. Nothing institutional heading to the doors. Now, that's just one guy that is dealing with big amounts of money out there. Hey, if we take a look at the some of the sectors in the S&P 500, we can see how Stevie's red line comes into play there, too. If we take a look at just simply, even though it's a weak, when I say weak, I mean weak by the standpoint of not a highly weighted sector, material sector, XLB, take a look at how price got up to 51.84 out here. And so 51.84 is going to be a key level. It's just a counter trend rally up to that area. But if it gets above it, well, then you can go bottom fishing inside the XLB, the material sector out there. Hey, I know that the financial sector, the XLF, that looks like that's moving pretty nicely today. But if we take a look at it too, well, you can see how price tested, so far rejected Stevie's red line. 25.92 is the number out there. If this is formed a bottom, it needs to close above that level. And then if it closes above that level, you're looking at 26.26 where price will head to, which is the bottom of its profile. But if it can't get above Stevie's red line, it ain't going to get anywhere. And it just says counter trend rally still to this stage out here. The key is you want to know what to look for. If we take a look at the XLK out here, we can see the same thing. What it did today was it got up, so far has rejected Stevie's red line. 69.31 is the price level. Yeah, I would say for the XLK to really turn around, you got to close above 69.71. That's the center of that daily market profile out there. If you can do that, then 73.81 is game out here. So those are the levels that I'd be watching. Of course, if you'd like to understand Stevie's red line, the oscillator and change line, it becomes pretty easy. Just come on over to the homepage of TFNN.com, sign up for the 30-day trial, risk-free trial. I was just trying to search for that word out there. Risk-free trial of mastering probability. All right, so what do you want to look at next? Oh, I know what I want to look at next because it was great to be away. Screens were off, all that kind of stuff, so it's good, just good for the soul, so to speak. And I didn't have to listen to all this minutia stuff. People talking about things that you just shake your head, or at least I shake my head and say, really? And you guys are the professionals? Really? But yet you come back today, you turn on the boob tube, and you see a lot of boobs out there. And I'm referring to conclusions that make no sense whatsoever when we take a look at the data. The actual past charts out there. All right, get to it, Steve-O. Look, I can't tell you how many people that I hear on that crazy tube out there, the boobs out there, that tell you that there's no way the reason the markets are going lower in this little pullback we've had so far is because the U.S. dollar index is going higher. It can't be done. Jeez Louise. Now, this is a quarterly time frame set of charts out here, just so I can kind of smooth out the data so that it's just so clear and evident. If you hear somebody say that, man, don't listen to the next word that comes out of their mouth, because that's liable to be hogwash too. If we just go back and take a look at panel 1, that's the S&P 500. Panel 2, that's the U.S. dollar index. There's plenty of times when the U.S. dollar index goes up and the S&P goes up. And we could put the Dow in here too. It doesn't matter what index it is that we use. You can just go back to 1995 into 2000. Why was that taking place into the 2000 top? Because money from around the globe was fleeing here to the U.S. The money didn't like being over in Euroland. It liked being here. Same thing is going to go on here too. Let's not confuse the issues. Just to stay with, and hey, by the way, the U.S. dollar index bottomed in 2011. As far as I can see, and you can see by looking at my charts out here, the S&P 500 is up gazillions percentages. I don't know what the exact percentage is, and it's not a gazillion, but it's up pretty big in the face of a rising U.S. dollar. For those people that want to say the markets cannot go up with a rising dollar, don't buy anything that they're talking. Don't buy into that. It is crazy nonsense stuff out here. It's correlations that don't make sense on Stevie's screen. Just look at the data. And how about those folks out there, those guys and gals that want to tell you that with interest rates rising, that is the cause of what's going on here? Of course, those are the same people that fail to realize that interest rates in the United States have been going up since 2015, and the S&P is up 20-some-odd% since then. Really? Now, look, that's not the only time that we have to look at. This is just take a look at the 13-month T-bill out here, just so you put it in context, okay? And you take a look at short-term rates going up. We can take a long-term rates going up, but just take a look at the rates going up since 2002. And bottom panel now, take a look at the bottom panel and the upper panel out there. And anybody who tells you that, anybody who shares that with you, you know it's 100% BS. It's all before Steve shared with you this chart that says otherwise. That is not why these markets are pulling back. It has nothing to do with interest rates on the rise. It has nothing to do with the U.S. dollar index on the rise. It just doesn't. It's just somebody who told them that, and they didn't take the time to go back and even take a look at a chart to even question that out there. I know. I'm just a simple guy, just looking at a simple chart that totally contradicts for years what people, in essence, are saying is the cause of the pullback out there. So That's how I see it. Hey, by the way, we had mentioned the Russell 2000 and its formation, what appears to be formation of a new set of market profiles out there. The same holds true for the Russell 2000. The same holds true for the NASDAQ. Now, that's going to be the interesting one because it's in the process of forming right now. And this says, hey, you know, Michael, because that pity party that you had noted inside the NQ really needs to close above the bottom of that box out there, 68.49. That's a real key level. We're at 68.35 out there. Because forming a new profile and then closing below that today says this is a real whiner of a equity futures contract. But if it can close above that, then all that's taken place so far today is a test of support. And that, oh, by the way, the Dow equity futures contract support will be 24,546, and in the ES mini, it's 2646. Steve Rhodes with TFNN.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Hey, by the way, the third thing that you can eliminate from the discussion as to what's leading the markets lower out here is the trade tariff stuff. Tariff schmariff. Give me a break. Yeah, I almost said that, but I didn't say it. You know what I was almost said out here. Take a look at this Chinese yuan out here. I'm telling you, the guys and gals over at Walmart, Costco, anyone who imports product from China has got to be loving it. We're talking oodles and oodles. Hopefully, if you're buying product in China, hopefully you're buying that product priced in Chinese yuan out there. Because when you take a look at the currency devaluation, and this thing is trying to bust through the highs out here. Most recent highs back in December of 2016 when it was up at high at 696 for a U.S. dollar. You're at 696 right now. I can't tell whether or not it's going to bust through this level, but it really could. And if it does, holy shnikes out here. This could actually be an A to B equals CD to the upside. We won't go measure that. We don't really need to. But my goodness, the windfall out here, how cheap it has actually gotten. Because there's not a tariff on every single thing out here. And who knows if they've really gone into effect out here, other than steel stuff, okay? Holy cow. Yeah. So if it's not interest rates, and it's not the trade tariffs, because that's just a bunch of garbage that they feed you on those other channels out there, and if it's not the U.S. dollar index, what is it? Something to think about. Hey, let's go ahead and finish this show out there. It's neither of those three things. That is for sure. So if we go take a look at what else should we look at inside the market today? Hey, gold. We should take a look at gold. I mentioned gold, but I don't think I gave you the number. Pullback so far today in gold, no big deal. It will become a big deal if it closes below 1224.10. Brand new. Bottom of a daily profile out here. Yeah, gold's pulling back in euros and yen, pound sterling out there, but nothing really too major as Stevie takes a look at it. So watch Goldilocks, 1224.10. We couldn't find a level of support for silver, but we can inside of gold. Folks, thanks so much for being here. Stay tuned. Your favorite polar bear, my favorite polar bear. He's up next, David White. Tom O'Brien, 3 to 5. I'll be back with you on Terrific Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletter.